Okay, I know that people want to get to spring training or get to their flights. I have a red eye at 11, so I'm going to be walking to the airport. But I'm going to talk to you today about MLB ownership, Atlanta Braves Holdings, Inc., and financial analysis. Now, this is an analytics conference. You could obviously ask why we're talking about financial analysis at an analytics conference. They both have the same root, analytics. And in fact, the reason why I'm talking today about financial analysis is that despite my boyish, youthful appearance, I actually had a long career as a financial analyst before I started writing at Baseball Prospectus, where I now kind of hang my shingle. So I want to start by talking about financial analysis just briefly. This is not anywhere near as computationally or mathematically rigorous as the stuff that we've seen at this conference. I'm kind of the lowbrow comic relief for this entire conference. In fact, because we don't have that much data available. There's like terabytes of data for every game in MLB. We get a few filings with the Securities Exchange Commission every year, and that's what financial analysts have to go by. And so consequently, what we do is kind of more qualitative than quantitative. The analysis that I would do is I would look at the numbers, but I would also ask management questions about their strategy, do industry research and stuff like that. And the whole idea was so that what I was doing was more kind of interpretive and explanatory, and that's what I'm trying to do today. Financial analysis has its own sometimes complex lingo. I'm going to try to break that down and explain what we can learn about the business of baseball from financial analysis. Baseball, as you probably know, about a $12 billion industry. That's revenues from 2024, that's a decent sized industry, but then you divide that by 30, it's about 400 million in revenues per team, which is decent size, but that's not really a big business. And in fact, for most of baseball history, at least I'd say up till expansion, these were small businesses. I mean, you had guys like Bill Veeck and Branch Rickey who owned teams, and some of them made good money off of teams, but that was the family business. That's how they put food on the table. And what's happened since expansion is that instead of the small business model, you've had fabulously wealthy people devote part of their wealth to owning a baseball team as an investment. And I'd say one of the first ones you can think of is Gene Autry, the initial owner of the Angels when they expanded. He made his money in Hollywood. He was not a baseball guy. He just took some of his money and devoted it to the Angels. 3 years later, CBS bought the Yankees, which was a disaster kind of for all involved, but it illustrates this idea of a baseball team can be an investment. And for that reason, I think this guy is sort of the avatar of the model or the modern baseball owner. This is Jeffrey Loria. And the reason why I say, not because he was a lousy owner, but because how he made his money. Jeffrey Loria was an art dealer. And what art dealers do is they buy a piece of art. Every day they own it, they're losing money on insurance, they're losing money on storage, and what they then seek to do is recoup that investment when they sell it. And that's sort of how investments work, that you buy it at one price, down the road, you're trying to sell it at a higher price. That's the investment model. So what kind of business is baseball? Since this is, like I said, not a real rigorous presentation, and I got all these nice little animations. This is the participatory part of my presentation. What kind of business, income does this illustrate? I'm going to put up 3 different quotes from owners. Shout out if you know who said this. First quote, who said biblical losses? Does anybody know? Okay, that was Tom Ricketts, the owner of the Cubs prior to the pandemic season, describing what would happen to the Cubs if they had to play in front of no fans. In fact, they did lose money, though I'll tell you, my parents sent me to 12 years of religious school. I don't remember seeing anything in the Bible about the magnitude of the loss that they had. This is my all-time favorite. The industry isn't very profitable, to be honest. Do you know who said that? Who? Oh, it was Bill DeWitt, owner of the Cardinals, just a week after Ricketts. The pandemic was a great time for ownership quotes like this. And this one's a great one. This is a guy saying, if you sign players to long-term 9-figure contracts, you're either going to have to raise ticket prices a lot or you're going to go bankrupt. Okay, who said that? Anybody know? Did someone say Angelos? Yeah, it was John Angelos, former owner of the Orioles, who neither signed players to nine-figure contracts nor went bankrupt. Instead, he just sold the club about 8 months after this. So we get this noise from ownership that the business really isn't very good. And the fact is, these are private companies. There are no public disclosures, and we don't have much to go by. The only real source that we can look at is Forbes, which does estimates. They don't have the actual numbers, but estimates every year of how much money the industry makes. They do this every March. They haven't issued numbers yet for the 2024 season, but in 2023, Forbes estimates that there was $581 million in operating profits throughout all of MLB. If you take out the Mets and the Padres, who lost a lot of money that year, it's about $1 billion, which works out to about $35 million of operating income per club, which as a financial analyst, I can tell you that's pretty good for an industry that isn't very profitable, to be honest. And by the way, of these three guys I mentioned, here's what their operating profits were per Forbes that last year. So they did a lot better than average. Now, this lack of transparency has led to calls for people that teams should open their books, should make public what they make so we can see what they've got. I've never been a big proponent of this for two reasons. One, there's a set of rules that all accounting uses called GAAP, and I'm going to call it GAAP, Generally Accepted Accounting Principles. And it's sort of the lingo that you use when you're communicating financial information. And the fact is, if an owner gives us numbers, we don't know if they're complying with GAAP. We don't know if they're giving us standard information. The other thing is that when I was an analyst, I would look at the numbers, but I would also interrogate management so I can understand what's going on behind them, what everything means, where they stand in the industry. If all we get is a bunch of sheets of paper from an owner of how much he's making, we can't ask that sheet of paper whether, for instance, their overhead numbers are really legitimate or whether they're inflated by $1 million because the owner's got two kids, a niece and nephew, at no-show jobs, paying them $250,000 each. So we don't have a way of knowing whether what we're seeing, what we would see from an owner, is going to be accurate. And in fact, they have an incentive, I would argue, to downplay what they're making. They want to be liked in their community. They want their family members to be honorary chairs of fundraising drives and stuff like that. And if they don't sign free agents, if they trade away promising young players before free agency or before they get expensive in arbitration, and they just look like some rich guy who's hoarding his money, people are going to, complain about him. On the other hand, if they can say, we really wanted to sign him, but we just don't have enough money, that at least gives them some cover to sort of poor mouth what they're doing. I would argue that Atlanta Braves Holdings, Inc. changes that. This is a publicly traded company on the NASDAQ. It has 3 different ticker symbols. I'll explain that later. This is the Braves, and they were spun off from the Liberty Media conglomerate going on 2 years now. And now, as a publicly traded company, they have to issue financial statements every quarter with the Securities Exchange Commission. Those are subject to GAAP, so we know that they're using the standard accounting rules to tell us what they're making. They're also audited by a third-party auditor every quarter or every year. And every quarter, they have to listen to guys like me asking them questions about their earnings. I was just on the Atlanta Braves Holdings fourth quarter conference call a few weeks ago. So we can have confidence that what they're talking about here is real. Plus, I would argue, and this is the biggest thing why I think this is a significant event for understanding finance, the incentives are reversed from what I was talking about on the last slide. If you're the owner of a public company, and you are always telling your shareholders your business is lousy and it's not very profitable, people are going to sell the stock, the share price is going to go down, your shareholders are going to get restive and maybe want, a change in management. Plus, Braves insiders own the stock too. They want to see the stock go up in price. So we've shifted from a paradigm where ownership is incentivized kind of to poor mouth what they're making to one in which ownership is incentivized to tell us the truth, but maybe give it a positive spin. And I'm going to talk about what that truth plus positive spin looks like. Now, before I do, though, let's make 2 things clear about Atlanta Braves Holdings. This is just one company, and it's one of the best run in the entire industry. So when I talk to you about how much money they're making, I'm not suggesting that's how much everybody else is making, but I am going to suggest that the contours of how they're making their money applies to the entire industry. So I'm going to start by talking about their profits from baseball operations. This is from their financial filings. They break down their business into a few segments. This is the baseball segment. I'm going to give you 3 financial terms. This is all I'm going to use in this presentation. Revenues are like sales. You go to a restaurant, what you pay, that's the revenues. Gross profit is revenues minus direct expenses. So in the restaurant, that's like what you're paying for the food, what you're paying for the staff, either the wait staff, the cooks, the dishwashers, et cetera. And then operating profits or gross profits minus overhead for things like marketing and accounting and HR and that sort of thing. So for the 4 quarters of 2024, the first full year in which the Braves were an independent company, this is what their revenues, gross profit, and operating income looks like. And what this is this is the pattern that you see for what we call a seasonal business. Seasonal business is one in which some parts of the year you make more money than others. Unsurprisingly, baseball teams make money in the second and third quarters because there's games going on, and they lose money in the first and fourth quarters because there aren't. This is completely unsurprising. But what I found interesting is that they also have to disclose what's called cash flow from operations. This isn't the same thing as income. Cash flow just measures when you got a dollar coming in and when you've got a dollar coming out. And I'll explain why it's different. This is for the entire company, not just for the baseball business, because they don't break it down. But you can see the operating income for the whole company, Atlanta Braves Holdings, follows that seasonal pattern. The cash flow doesn't. They have a ton of cash flow in the first quarter of the year, and then they gradually bleed that out over the rest of the year, though they still end up with a positive balance. The reason for this is that if after this conference, I decide I want to buy a Brave season ticket, they're going to get my cash today. That's going to fall in that first quarter number. However, under GAAP, they're not allowed to recognize those revenues on their financial statements until the games are played. So if I spend $8,100 buying a season ticket, they're going to pocket $8,100 tomorrow, when the credit card charge clears, but they're only going to book $100 over the 81 home dates of the season. And this is the same pattern all baseball teams have. So a couple of years ago, you might remember the Padres had to borrow money in September, and everyone was shocked, said, the season's going on, they have to borrow money. This is why. Baseball teams get a ton of cash at the beginning of the year when people buy season tickets and do advanced sales, and then they bleed it out over the rest of the year. And in the case of the Padres, who lost a lot of money in 2023, that's when they're going to run into problems. But for most teams, you get cash in the first 3 months, and that lasts you for the rest of the year. The Braves also have real estate. Not all teams have this. They have a development called Battery Atlanta that's adjacent to Truist Park. And what you can see from this is that this real estate development, this is true of all real estate developments. This is why a lot of owners want real estate. It gives them not only extra income, but extra steady income. It's not particularly seasonal. And you can see it adds a lot to their operating income throughout the year, not just in the first or in the middle 2 quarters. Now, those are the things that the Braves have unique to themselves. There are other things that you find out in reading the footnotes of their financials that all teams benefit from. One of them is access to capital. MLB goes out to a consortium of banks and says, we want to borrow money from you, and anything you loan us is going to be backed by the full faith and credit of our $12 billion industry and all the constituent teams within it, which is, from a bank's perspective, that's a safer way to loan money than to one club that makes $400 million a year. That capital is available in 2 forms. There's what they call the league-wide credit facility that everyone can borrow from. The amount that they can borrow depends on the club. The Braves could borrow up to $125 million. They haven't, but interest rate on this floats around. It was 5.63% as of December 31st. There's also another thing that MLB makes available to the clubs, because they just borrow the money, then turn around and loan it to the clubs, is what they call the MLB Facility Fund. This is money that MLB will loan to teams specifically for like ballpark training facilities, for real estate type developments. The Braves have two loans under that. One is a term loan. A term loan is something you take out for a set amount of time, and then you pay off the amount you owed at the end of that period of time. They borrowed $30 million in 2020. It's due in 2030, and they're paying 3.65% interest on that. The Braves also have $39 million outstanding on a revolver. A revolver is just like a credit card. You take out the money when you need it, you pay it back when you can, and the interest rate on that is 5.71% as of December 31st. As of today, the top corporate credits in the U.S. borrow money. It's what's called the prime rate. Prime rate is 7.5%. So all baseball teams have access to, can borrow money at lower interest rates than almost anybody else can get. Second thing is MLB Advanced Media. I think a lot of you are probably familiar with this. It runs the At-Bat app. It does some internet stuff. It does some websites. A lot of it was sold to Disney, but the 30 clubs maintain a small ownership piece. That ownership piece, and this applies to all the clubs, is worth about, or they put in about $54 million. For that $54 million, all 30 teams get about $20 million a year from MLBAM. That's one of the things that the footnotes tell us about. Not just the Braves, but every other team. And this is my favorite. Baseball Endowment LP. I did not know about this until the Braves were public. This is an investment fund that's owned by all 30 teams. You can't get very much information about this. What we do know from the filings that the Braves do is that as of the end of the year, each team had invested about $40 million in it. They don't get a lot of income, but in investment funds, the only income that you get paid to you is interest, dividends, and any gains on sales of securities. The amount that the investments go up in value, the appreciation, doesn't count as income. And we don't know exactly what, well, we don't know at all what the fund is worth right now, but I think it's reasonable to guess that this investment fund, owned equally by all 30 teams, is worth somewhere between $2 and $5 billion. Now, these are things that all teams benefit from. This is one more that everybody shares. Revenue sharing, each team, I'm going to grossly simplify how this works, but basically every team puts 48% of their local revenues into a pot, and that gets then split among the teams equally. It's not that simple, but that's basically what the idea is behind it. What that means is that a high revenue team that brings in a lot of local revenues like the Braves, they put in more to the pot than they take out. How much is that difference? Well, the Braves in 2022 lost $16 million through revenue sharing. Last season, it was up to $42 million. Now, what $42 million means to the Braves is it means that for every dollar they bring in for the ball club, they're giving up 7 cents to subsidize the smaller market, weaker performing teams in the industry. Or another way of saying that if they could keep that money, their gross profits would be 46% higher. So if you're a fan of the Pirates or the Marlins and you're upset that your owner just takes revenue sharing money and doesn't do anything with it, you're nowhere near as upset as the Braves are. So I want to talk about the three classes of stock. There's three things they call Class A, Class B, and Class C. There's about 10 million Class A shares, 1 million Class B shares, all owned by insiders, 51 million Class C shares, which is mostly owned by the public. So there's 62 million shares. So I know there's not as many people here as there were at the beginning of the conference, but in theory, we could all pool our money together, buy 31.1 million shares. We'd own the majority of the company, and we could run it as we want to, right? Actually, I don't think we got the money anyway, but you can't do that. The reason is because shares of stock have voting rights attached to them. If you own a share of stock, you have a say in everything from who the auditor is going to be to whether the entire company should be sold. The way the voting rights for the Braves work is the Class A shares, there's about 10 million of them, every share gets a vote. That's typical what you see with most stock. The Class B shares that are all owned by company insiders, they get 10 votes per share owned. And the Class C shares, which is the ones that we can buy, we're just along for the ride. There's no voting involved with it. So the fact is there will never be a hostile takeover of the Braves. Nobody can amass the shares they would need in order to do it. The Braves will get sold to whoever Braves ownership wants to sell it to, not to anybody else. So what can we learn from this about baseball as a business overall? Well, it's profitable, at least in the case of the Braves. Forbes estimated their operating income in 2023 at 66 million. Their gross profits from their own filings, 2024, said 91 million. And that's income that's on top of the increase in value of the team itself, the initial investment that they made. They get cash flows that even out the seasonality. Most clubs get a bunch of cash at the beginning of the year, and that lasts them for the rest of the year and more. They also have real estate, the Braves do, and a lot of other clubs either have it or are trying to get it, that also even out that seasonality. And they have access, all 30 teams do, to preferential interest rates on anything that they borrow, 20 million a year from MLB Advanced Media, and a multi-billion-dollar hedge fund that's run for their benefit. So let's look. So how have the Braves done as an investment? Well, their market capitalization, that's the value of all their stock, is about 2.6 billion. They have about $500 million of debt. So you add that together, you say they're worth about 3.1 billion. Forbes in their last estimate said they're worth 2.8 billion. So let's use that number. Braves were purchased in 2007 for 400 million. And this is the only advanced math I'm going to do in my entire presentation. If you take that 400 million in 2007, see what it's worth today, that's an 11.4% compound annual growth rate on the investment, which is better than what you get in the stock market, better what you can get with bonds, better than what you can do with real estate. And for a business that isn't really profitable, to be honest, that's pretty good. That's my presentation, and if you have any questions, I'd be happy to take them. Thanks.
Thank you for a great presentation. I'm very interested in learning more about the capital structure of the Braves. Do they issue their own debt? There's
Yeah.
positive signaling associated with that, so that might.
Yeah, the question is capital structure. Well, I showed you the stuff that they have outstanding with MLB. They haven't, I'm pretty sure they don't have any debt that they've taken out for the baseball operations, but they have mortgages on some of their real estate. But it's not it's, if you know the term, it's not a particularly levered balance sheet. They don't have a whole lot of debt outstanding because they don't need it.
Okay, sorry guys, I'm talking again. My question is, how does the Braves setup compare to, I think it's, at least NFL wise, the Green Bay Packers, I think are also are publicly owned. If you know, what's the difference between what they do versus what the Braves do?
I'll be completely honest with you. I have no idea. I've never looked at them.
That's why I asked, because I
Yeah.
also don't know. I don't know if anybody else knows. Okay.
I have two questions. There's this tax that's paid by the, well, big market owners when they go over the salary cap.
Right.
Where does that money go?
That goes, okay, because the Braves are not over it. They're, I think, 8th in payroll in MLB. That goes into, I'm not sure. Anybody else here? Scott, you know.
So everybody who's above the floor, below the cap, gets a distribution of those funds.
Thanks. And then the second question is, you said they pool 40-some%.
48%, yeah.
And then the teams keep the other part, each team that pays in.
Right, yeah. They keep 52%. They put 48% into the pool that then gets split evenly among all the clubs. There, I was able to answer one.
Rob, to what extent do you think you can use the information that are in these Braves quarterly statements in terms of the expenses on the baseball operations side to sort of get a gauge on what those expenses look like from team to team. In other words, all of the costs associated with running an operations department that don't go directly to payroll, which, since we have revenue estimates from Forbes, you can kind of look
Right.
at that and then come up with an idea, like over a period of years, this is how much these organizations should be spending on payroll.
Yeah, well, here's what we have from Forbes. We know what their revenues are. We have, well, the estimates of revenues, estimates of operating income. So we know it's being spent between those two lines. And like at our site, COTS Contracts gives you all the payroll numbers, but how teams allocate all the other expenses, I would imagine there's probably a fair amount of variation.
Hello, I'm an accounting professor, so I want to thank you for an outstanding presentation.
Thanks.
Welcome you to coming to my class anytime and give the exact same presentation. My question is like maybe a little bit more in the weeds. A lot of the teams had some issues with like their local revenue contracts, maybe television going bankrupt. And so with regard to the Braves and kind of the increase in their contribution to the pool, is that related? Is that going to be an ongoing thing, or will that kind of drop down a little bit maybe once some of these other teams reestablish whatever networks or local revenues that they might have?
Yeah, the Braves are in a really advantageous situation. There's a big broadcaster called Diamond Sports that filed for bankruptcy. I think it's like almost 2 years ago now. And it's just emerged as now it's FanDuel Sports, I think. On their last conference call, the Braves strongly hinted, and they're still on that network. They didn't get dropped like the Padres and the Diamondbacks did. They strongly hinted that their deal is going to be just as good as it was before. The Braves kind of own the whole Southeast market, given the state of the two Florida teams. And so that's still a pretty valuable TV franchise. And they also said on their call that, I think people know, this is the last year ESPN's going to be doing Sunday Night Baseball. And if I can get in the quote right, Malone said, you won't even notice the difference. So something I think is already in the works for MLB there. So yeah, there's some teams that are going to be burned by the loss of local revenues. They're not one of them.
Yes, is John Malone the #1 stockholder? And when he passes, where does it go from there?
Yes, and I'm not sure, respectively.
Rob, I just want to say this was a really amazing presentation. Thank you so much. The owners have been crying poverty since my friend Marvin Miller was running the union in 1966. And we've been in a lot of, because of the owners, we've been in a lot of work stoppages. And now there's talk that the owners are going to lock the players out for a salary cap. And this is the first time they've said that since I believe it was 1994. They kind of went away. And I have two questions. One, I know it's hard to predict, but do you think that the owners are going to dig their heels in for salary cap? And number two, as a member of the media, can you and others really show the transparency that it's just not as bad as these owners say?
Yeah, second question first. I try. I'm on the finance beat at Baseball Prospectus. There's others who are doing it. Our megaphone isn't as big as the owners are. As far as whether there's going to be a lockout to get a salary cap, the owner's representative, which is the job title that I use for Rob Manfred, has already said that he's already said he likes the idea of lockouts. He thinks that they're effective. I'm not particularly optimistic about the 2027 season. CBA expires at the end of 26. The interesting thing is, if you look at the Braves, I showed you, they probably wouldn't be above any kind of cap, but unless you assume that putting a salary cap will magically make their revenues go down, if you say cut payroll, they're just going to make even more money. So I'll leave it at that as to what the motivations might be.
Hey, Rob, great talk. I wanted to ask about the endowment fund. Two things. You had estimated at 2 to 5 billion. I was curious just kind of how you got to that amount. And I wanted to know if you would be willing to speculate wildly on what kind of holdings might be in that fund.
No, that's fair. The 2 to 5 billion, I kind of made it up because here's the thing. We don't know when it started. But I used sort of the S&P 500 as a proxy for what they were probably invested in, and assumed that the investments came in evenly over whatever time frame, and that's what I came with. I think 2 billion is way low, because if each team's at 40 million, that's 1.2 billion there. I am not sure, but I would bet you almost anything that it's a sort of typical hedge fund type portfolio of public stocks, probably some bonds, some private equity investments, but nothing that's crazy, I don't like, not venture capital type stuff that's really risky. I think it would be just a typical well-diversified type portfolio. Okay, and I've got one more.
Thank you very much for the presentation again. I'm an actuary, so I like the finance side as well, so excited about that. So my question is, how much of this is new by virtue of them being public? I know there's probably some stuff in here that you could figure out based on the CDA maybe. What did you learn from the public financial statements that wouldn't have been available in 2022 before they went public?
Yeah, that's a good question. When they were split off from Liberty Media, I looked at the Liberty Media financials, and the stuff about baseball endowment partners, about the capital, about MLBAM, they didn't disclose any of that. It was because it was just one segment within the corporation. So all of this stuff has really been only since their third quarter 2023 filing, which was the first one as an independent company. Wow, an actuary and an econ professor. You guys are a tough group here. All right. Thank you very much.